Breaking down the boundaries between technology and finance, the U.S. Department of the Treasury is taking a closer look at the rapidly evolving world of artificial intelligence in the insurance sector, claims processing, to underwriting. Insurers are increasingly turning to AI to modernize and innovate, but what are the potential risks and challenges that come with it? Tonight we'll explore the Treasury's latest roundtable discussion, where industry leaders and experts weighed in on the benefits and pitfalls of AI in insurance and what it means for consumers. Good evening, and welcome to our analysis of the latest development in the world of artificial intelligence and insurance. Today, U.S. Department of the Treasury hosted a roundtable discussion on the growing use of AI in the insurance sector and the potential benefits and challenges that come with it. The heart of this discussion is the increasing use of AI by insurers to process claims, underwrite policies, and detect potential fraud. Insurers are using machine learning algorithms to analyze vast amounts of data, including medical records, credit scores, and even social media activity to determine the likelihood of a claim being filed. This can lead to faster and more accurate claims processing, but it also raises concerns about bias and discrimination. For example, if an AI system is trained on data that reflects historical biases, it may perpetuate those biases in its decision-making. This could result in certain groups being unfairly denied coverage or charged higher premiums. The Treasury's roundtable discussion aimed to explore these challenges and identify potential solutions. One of the key takeaways from the discussion is the need for greater transparency and accountability in AI decision-making. Insurers must be able to explain how their AI systems arrive at certain conclusions and ensure that those systems are fair and unbiased. This requires a fundamental shift in the way insurers approach AI, from simply using it as a tool to reduce costs to actively designing and testing systems that prioritize fairness and equity. The Treasury's discussion also highlighted the importance of regulatory frameworks in governing AI uses in insurance. Currently, there is a patchwork of laws and regulations that govern AI use in various industries, that there is a need for more comprehensive and cohesive guidance. The Treasury is calling for industry-led initiatives and guidelines to ensure that AI is used responsibly and with the utmost care. But what does this mean for consumers? Precisely. In short, it means that insurers will need to be more transparent about their use of AI and provide clear explanations for how their systems work. It also means that consumers will have more control over their data and be able to opt out of AI-driven decision-making if they choose to do so. And the Treasury's roundtable discussion is just the latest development in a broader conversation about the role of AI in the insurance sector. But
as AI continues to evolve and improve, it's clear that insurers will need to adapt and innovate in order to stay ahead of the curve.
But with great power comes great responsibility, and it's up to insurers, regulators, and policymakers to ensure that AI is used in a way that benefits consumers, not just the bottom line. Taking the coming weeks and months, we can expect to see more developments on this front, including potential policy recommendations from the Treasury and other regulatory bodies. For now, it's clear that the use of AI insurance is a complex and multifaceted issue, and one that will require careful consideration and collaboration to get right